Some stocks seem to have developed an immunity to the current inflation and economic stress all across the globe. Or so we think. Let's look at one such stock. In our video on Amazon stock exploding and everything you need to know, Amazon stock analysis, we thoroughly assess everything you need to know about the e-commerce giant stock. First, let's talk about the headlining stock split that happened earlier this year. Stock splits usually signify that a company has been doing quite well and is prepared to welcome new investors, especially because the company's financial success may have made it difficult for smaller investors to buy in. Often, the split itself can be a major booster of the share price. Amazon recorded a slight share boost after announcing its plans to split stock in March, 20 years after the previous stock split. The Amazon company has been experiencing exponential growth, recording a 21.70% increase in total revenue in the year 2021. Earnings were also pegged at $33.6 billion, a 56.41% increase. In 2022, however, rising inflation worldwide and rising costs have caused Amazon stocks to perform quite badly. Despite this, the company is known for its ability to manage tough times and bounce back. A stock split could influence stock prices because of the influx of buyers and subsequently influence buyers. It is important to note that this content is for informational purposes only and should not be interpreted as professional advice. All you need to know is that management is quite optimistic about the future and for very good reasons, some of which are the latest moves that the e-commerce giant has made. In a bit, we'll explore some of these new additions. Amazon is a global leader in e-commerce and cloud computing, offering a vast variety of products and operating an online marketplace. During the COVID-19 pandemic, the company provided critical services with its vaunted home delivery system. Amazon Web Services offer a wide range of global business purpose cloud-based products, including storage, databases, analytics, networking, mobile development tools, etc. You have the Amazon Glacier, an extremely low-cost storage service that offers fast storage for data archiving and backup. The Cloud Directory is also a service that allows you to create flexible cloud-native directories for managing data hierarchies. Kinesis, under the function of analytics, is a service that helps you to stream and analyze real-time data at a massive scale. All of these and more are the services provided by the company. It looks like Amazon is going to be leading globally for a while. Do you think this is enough to keep the company running and exploding as it currently is? Tell us in the comment section down below. Now let's talk about something relatively new. Amazon Prime Video, which debuted its first showing of Thursday Night Football on September 15th. The game featured Los Angeles Chargers versus Kansas City Chiefs and was available only via streaming. Amazon is about to pay $1 billion annually to carry and produce the games. One other business with huge potential that the e-commerce giant has moved into is healthcare. On July 29, it announced it would acquire One Medical for about $3.9 billion, including debt. One Medical is a technology-centered primary healthcare business, and Amazon's acquisition is its largest push yet into the healthcare system. This move began with the company's acquisition of PillPack more than 4 years ago for a reported $1 billion. This gave Amazon the ability to ship prescription drugs around the country, with other large corporations placing bets on expanding their growth and revenue through healthcare services. Amazon is definitely going to face some stiff competition in this area. With these relatively new introductions, we are not surprised that Amazon stock keeps exploding. Shortly, we'll show you how to buy Amazon stock if you're looking to expand or diversify your stocks, as well as other information you surely wouldn't want to miss. So go ahead and subscribe to this channel now. We have more coming up for you. After the famous stock split, Amazon has been in quite an uncomfortable position. Rising inflation and labor shortages have disrupted the flow of goods through supply chains. Trucking capacity has become scarcer and more expensive, and costs keep soaring. Inflationary pressures have certainly taken a toll on the company. The Amazon bulls, however, think that the company will soon be back as it is one of the biggest beneficiaries of the accelerated digital transformation. Let's talk about how to buy Amazon stock now. The first thing to do will be to open a brokerage account. Most brokerages allow for fee-free stock trading, but ensure to do all the necessary checks for fee and account minimums. Then decide on your investment budget. Before the recent split, one share was valued at nearly $2,800. Now you can purchase a share for as low as $125. Would you then like to make a lump sum purchase or in smaller amounts over time? The dollar cost averaging method may help you pay less per share on average time, allowing you to put your money to use instead of waiting around. You'd also have to figure out how Amazon fits in with your other investments. The ideal investor is willing to think long-term, similar to the company's management style. It is someone who believes it will continue to find new business opportunities to maintain its long-term sales growth and premium valuation, says Tom Fort, Managing Director and Senior Analyst with D.A. Davidson & Company. You can now place an order. If you are ready to buy Amazon stock, log into your brokerage account, then type in Amazon's ticker symbol, AMZN, and the number of shares you want to buy or the amount of money you want to invest. You may have to pick what type of order you want to make. Two of the most popular types are market orders and limit orders. Market orders buy or sell shares of a stock at its current market price. A limit order only buys or sells shares if the stock reaches a specific price you send. Finally, you need to track and review your earnings regularly. That way, you can see how your account is doing and evaluate whether or not you need to make some adjustments. Amazon stock has experienced a downward spiral following its stock split. But if there's anything we know about the e-commerce giants, it's that soon enough, they will be bouncing back. For more detailed analysis of the recent stock split, check out our video titled, How to Trade Amazon Stock Split Like a Pro, Amazon Stock Split Explained. We'll come your way again some other time. See you then.